Welcome to Maximising Efficiency with Dext. Once again, I am joined by Paul Lodder, and we are continuing our exploration of Dext Solo. It's the standalone product for all of your non-VAT registered, unincorporated businesses to get the full completeness of records, so you don't have to go around chasing them and collecting those big shoe boxes of receipts when you're ready to submit their tax return, especially with MTD for ITSA just around the corner. So if you haven't watched our last few videos, I would definitely recommend we do so, because this is our fourth video on Dext Solo. And Paul, what are we going to be covering in this video?
So we are going to be covering the exciting part of Dext Solo, which is all of the reporting side and some of the sort of tax aspects to it. So what I'm going to do, I'm just going to jump into our account here, and I'm going to, as in the previous videos, I'm just going to use myself as a client who has two self-employed businesses, UK property business, number of UK properties as well. I'm going to jump into this taxi business. Now, as we went through last time, all of the different submission methods that are available, but there can be a tendency for clients to upload all of their documents, whether it's personal or business expenditure. And this is where you've got the option potentially to try and automate the treatment of those transactions. So supplier rules, if you already always know they're uploading a document which is always just 100% personal, it doesn't actually go through the business at all, they're just uploading it, you can use supplier rules to ensure that that always gets posted to personal. But there will be some transactions that are business expenses, and you want to make sure that they are correctly recorded and any disallowable element has been picked up. And this is where using a customizable chart of accounts can be invaluable and save so much time. So in terms of adding a category, everything needs to be mapped to a tax return box. This is the SA 103F in relation to self-employed. But you can create any other categories that you wish, and you can apply an automatic disallowable default to that. And the examples of where you might want to use this, if I was just to type in client, I have set up a category called client entertaining. So every time a document is posted to client entertaining, it will automatically be treated as 100% disallowable for tax purposes. I have also, just as another example here as well, is I've set up an account just called British Gas. So I'm not using supplier rules here, but we've done a calculation. The person's business, they work from home, they've got X number of rooms, and we've calculated that a certain percentage can be treated for business purposes. What this means is every time an invoice comes in from British Gas, and we're actually posting it to the nominal ledger code British Gas here, but tagged to the rent, rates, power and insurance costs, we will automatically calculate 30% as disallowable. What that all ultimately means, everything is being worked on behind the scenes, but here we have British Gas, I'm posting it to the category that I've set up, and we've also got Hilton Garden Inn, where I am posting that to client entertaining. But the magic really works when you come onto the report. So I'm going to hand over to Max, who's just going to run through the reports.
Perfect. So with Dext Solo, there's sort of two forms of reports effectively. The first one is called summaries, and this is, a full sort of detailed analysis of everything we've put in, and we can change the dates and we can move around the date range if we need to there as well. So this has everything we've posted into Dext Solo, whether that's personal, whether that's repairs and maintenance, or whatever it may be, it's all in here as well. So this is a really great place to come and do some bit more of like an analytical review, see how profitable or unprofitable you are over the previous months. And another great feature in here is looking in that personal box there. So we might get to the end of a quarter, the end of a tax year, and we want to just question with our clients whether all of these personal items are in fact personal. So we've jumped in there and we can select all of these items, and we can export them into an Excel, into a PDF, and we can send these to our clients and just say, we think these are personal, we've allocated them to personal, can you just confirm that they are? personal, if not business related, and then we can include them back onto your tax return as well. Also within that summary section there, the ability to change dates around is great if you need to do some work around the basis reform with the tax periods, and you can move around the date range there and have a little play around with there, and it's a lot more flexible within this summary section of the report. However, if you've come to the period that you need to now do the submissions, we're going to be jumping into this report section here, and we can view our tax summaries of how these will go and be exported, ready to be submitted to HMRC. So what you won't see in here is the personal transactions. However, you will see what has been disallowed from our normal codes as well, and all of our transactions have been included within the headings that HMRC want to see on that tax return there. So we've got everything there. We've got all of our transactions listed out for the tax year, and we can see what's disallowable there as well, ready to be exported. So that leads us on to our next video there. Is what do we do now? We've got all of our detailed tax report there ready to be filed. How do we get that submitted to HMRC? And what you as an accountancy firm probably need to start considering around implementing a solution like Dext Solo, or definitely Dext Solo, when looking at mitigating the headache and the pain point of collecting all of that data from your clients with MTD ITSA just around the corner. So hopefully you can join us next time, and we look forward to seeing you then. Cheers.
Cheers. Thank you.